overnight lending rate in the fixed income market expanded by 217 basis points to 8.5% despite low funding pressure. Dipo Ajayi, head of fixed income and FX at Chapel Hill Denham, joins me to discuss activities at the markets. Dipo, thank you for joining us today. Let's get right to it. Yesterday, in midweek trading, we saw mixed trading in the OMO and NTB segments. We saw average yields closing flat in both markets. Bring us up to speed. Did this continue today, or did we see a change of market direction?
Yeah, good afternoon. Thanks for having me today. For on the treasury space and OMO space, markets still remain calm. A lot of investors are still very much staying at the door. A lot of people are still of the view that yield will still go up. So most investors are very careful at being a bit aggressive at such a time like this, and also considering what's happening in the bond side of the market. So most investors are currently just staying by, waiting for a better return before they actually jump into the market. So markets actually traded flat today.
Now, I thought the market was expecting an OMO auction by the CBN today. Did that happen?
No, we've not seen anything around that. No, because I guess because of the level of liquidity in the system.
Okay.
Compared to what we have last week, the level of liquidity has thinned out significantly, and as a result of that, that's already pushing yield up. So, as we speak, we've not seen any action from CBN in that direction.
Okay. Now, would you say there are a good amount of attractive counters across the yield curve at the bond market for investors to cherry pick?
Yeah, if you compare to where we were last week, I think we are on a better pedestal for any investor that wants to come to the market now. If you compare, if you look at, let's take the 2042 maturity, for example. Last week, it was trading around 12.75 levels, and as we speak, the beats in the market are around a bit above 13%. We're already seeing like 13.05. So it means that there are sellers in the market that can sell very close to 30% for any investors that actually want to buy as we speak. So if you compare to what we saw last weekend, it poses a very good opportunity for anybody that actually wants to cherry pick the market and invest in the markets.
Now, what is your forecast for market liquidity? And today's Thursday, there's just one more trading. Are we expecting robust levels to continue?
Yeah, for us, we don't think we don't expect any significant inflow of funds into the market as we speak. What we actually expect in the market will be later in the months, and that's coupon payment for about 4 maturity, the 37s, 29, 49, and 2023, and we're expecting about 215 billion to hit the system in them from those 4 maturities. And but before then, we think that yield will continue to inch up a bit until when we see those liquidity coming into the market to actually cushion the effect of the market. So, but bearing that, we are not expecting any significant inflows into this market as we speak.
And while we're expecting a surge in borrowing by of the fiscal authorities at the bond market, this year, how are things at the corporate bond market in terms of level of activities? You know, commercial papers, we saw a healthy level of activities last year. How are things shaping up in that market now?
Currently, as we speak, we have some commercial paper in the market already. We have MTN in the market, we have RAND in the market, Dufuel was in the market, and a lot of corporate guys are currently coming into the market to actually find a way to actually raise funds at this particular point in time. But one of the problems that they are currently facing is the pricing. A lot of investors are currently trying to price in the tax elements that is applicable to instruments such as commercial paper and treasury bills into their pricing. So, and as a result of that, the expectation from most investors now is higher than what most issuers are ready to bear as we speak. So we think that this will likely continue because when you just suppose the return on most of those commercial papers in tandem with relative instruments in the market is almost at par. So at that point, you are looking at where's the credit risk benefit that you are taking, where's the liquidity risk benefit that you are taking. So as we speak, I think it will become more difficult for corporates to raise funds in the market because of the rate at which investors will be looking due to the withholding tax elements on some of these instruments.
So what, I mean, in terms of options, where does that leave these companies? the corporates?
Yeah, as we speak, there's no other options they have. They will still have to come to the market because taking funds in the market is still better than going to banks to actually raise funds. But just that they should be ready to pay a premium, considering that most investors will push the tax cost to issuer, considering the level of liquidity in the market, and also considering the fact that the DMO is becoming a bit bullish. If we check the calendar that was released for this quarter, it shows that they are taking a notch higher compared to what we saw last quarter. So as a result of that, that will also be priced. The world market will also price that into most of the pricing for these corporate issuances.
Oh, that's interesting. So for the FX market, how is the Naira shaping up against the dollar? Where are we in terms of supply-demand dynamics that have been seen? The FX reserves depreciating or going down in size, if you will. What can you tell us?
Yeah, for if you check the reserve, what we did, the CBN found a way to actually maintain the reserve around 39.5 billion. And there are times that you just found out that it's been on that level for some time, and you'll be wondering, but CBN has been selling for money. But just one thing is that CBN has not been aggressively pumping liquidity into the market in that dimension. But yesterday they sold some funds to foreign investors yesterday. But however, they are not extremely active in the higher end window to actually provide liquidity into the market. So we can also still see the effect in the parallel market because currently now parallel market is conveniently trading around 587 levels. So it tells you that most of those funds liquidity are still going through around that pricing, and a lot of people that are actually buying autonomous funds are actually buying funds at around that 580.